All right, here we go. Gunner, we're live, buddy. Here we are. Oh, you're looking good.
I'm here.
Set up. Now look, I say this every week almost, but like me and Gunner, we're in the same place. Now this is a different look at the conference room that I'm normally at. We got the glass walls over here, Gunner's over that way. But most importantly for everyone here, how many people we got? We got around 100 people on YouTube right now live. That'll probably tick up a little bit. Most importantly, we've got Enrique Abeyta joining us. That's why we just switch it up a little bit here. He's joined us here in the Paradigm Press conference room. And we've got a great show, great top trades, everything lined up today because, as always, markets are moving. We've got plenty of things to cover. And we wanted to pick Enrique's brain because, Enrique, I know you've been in the chat. You've been, saying some of the stocks and trades that you're looking at. And we were talking earlier with Gunner in the office here. This is kind of the market for your style. So we want to get to that. We want to talk about some of the trades that you like, some of the things that you're seeing. We'll also get to the normal stuff that we do on the show where we'll have Gunner take a look at some of the top trades and charts that he likes as well. So we'll be pretty packed out today. But the chat is open if anyone wants to write in any questions, comments for Enrique or Gunner. Go ahead and do that. Or if you just want to say hi. And maybe, so I don't butcher it, Enrique, maybe you let everyone know, because I think you came into the chat graciously, right? You have lists and lists of accolades. I would say, I don't know if this is true or not. I feel like we're here outside of Baltimore. You might be the smartest person within several square miles.
I doubt that.
I think so. Enrique is like the smartest guy that I know, and he's here in the room with us. But I don't want to butcher the intro here. Tell everyone here at the trading desk and top trades a little bit about yourself, like sort of what's your history and where you're coming from.
Yeah, well, first off, I want to thank everyone. Everyone's been very gracious in the chat. I appreciate the support. I try to get in there. I'm usually there first thing at like 5 or 5:30 a.m. and then, kind of in and out. Look, real quick, my background, I was born in out west, grew up in Phoenix, Arizona, grew up real poor. Didn't like being poor. And when I was a kid, 30, 40 years ago, the best way to get unpoor was to go to Wall Street, sort of before Silicon Valley and all that stuff. So I got myself into a good school, the Wharton School at University of Pennsylvania, and then got to Wall Street in the early 1990s and began as a banker at Lehman Brothers. But beginning in 1996, I began a career as a professional money manager, managing hedge funds. And across 25 years, I was actually the founder or part of the founding team of 4 funds where we raised a total of $6 billion and was a professional money manager, managing over $1 billion for the better part of a year, for the better part of 2 decades. I also, and a little bit of a bit of trivia, managed a short book of over $1 billion for probably close to a dozen years, which I'm maybe one of 30 people on earth that ever was dumb enough to do that. But then bringing it to where we are right now, 5 or 6 years ago, my friend Whitney Tilson was joining another great organization and created in the publishing world, created something called Empire Financial Research. I learned about this business and I was like, this is awesome. I can do what I love to do, which is talk about stocks and markets. Yep. But instead of giving that advice and trying to make money for, the California Pension Fund and the United Arab Emirates, I'm helping real people and regular folks. And so Whitney and I started Empire about 5 years ago. And then recently I sort of stepped out on my own and began the conversation with you guys. But real quick, I'll sum myself up this way. I've been a professional money manager and trader for 25 years. I've managed billions. I really thrive on trying to take that experience and share it with people in a way that's both educational, informative, and profitable. So, and I just love it. I love being in the chat. I love talking ideas.
Yeah.
And
I knew right from the beginning. We met a few months ago in this conference room, and I remember when you you told me the story, told me all the stuff that you had done at Empire and all these things. And then at some point in time, we got into uranium, and you're like, oh, there's only, if you forget everything else, the whole entire conversation, just know this one company, this one ticker, and that was Talon, which I think was TLNE, but now it's TLN.
Correct.
And that trade, again, at Paradigm Press, we've been talking about energy, uranium for decades. I did not know that ticker, and I knew Enrique was the real deal. He had a ticker that I didn't even know of, and that was just burning the world up. And that one's been a huge winner over the past 6, 12 months. So when it comes to a call like this, top trades, Enrique's the real deal there. Gunner, normally we throw it over to you. So I want to do that. I want to get your update, sort of what you're seeing in the market today. And then if you want to go into any charts or look at anything that you're seeing there, and then we can kick it back over whenever it works for Enrique, just for some trade ideas and see what's on his radar as well. So what are you seeing this morning? Anything popping out?
Well, there's a lot of green on the screen this morning. There was a very favorable reaction to the PPI number that came out, a little bit soft. So some of those inflation fears are starting to ebb, and the market is just slowly creeping back off of those yen carry panic lows from last Monday. It's pretty incredible how we had this massive volatility spike, and it's just kind of dying on the vine here. And I'll share my screen here in just a minute, and we'll get into some of this. But you can see here from the heat map, we got a lot of green in tech. The semiconductors are continuing to storm back. NVIDIA, SMCI, they were laggards last week. Some of the smaller ones had really taken the baton and run with it and had pushed SMH a little bit higher. But NVIDIA and SMCI are storming back here this week. They caught a bid yesterday and they performed really well. They're up again today. The big news mover so far today has been Starbucks poaching the Chipotle CEO. So we have more on our bowl radar here, our bowl food profits, I guess, channel, Matt, that we talk about almost every week.
Did you see one? I think Sweet Green, that's another bowl situation. I think they reported last week and they popped.
Crushed it.
Yeah.
Yeah, well, maybe bowls are out and coffee's back in or desserts back in, since Starbucks is a dessert company now, I guess you could say. But yeah. I mean, so shares of Starbucks are spiking. They're up 22%. Everybody thinks this is going to be a good move to turn this one around right here, because we know Starbucks has been flailing for some time. And then you look at Chipotle, and they're all sad they lost their CEO. They're down like 13% right here. But what's really caught my eye, aside from the news stuff going on, is how well gold is doing. I think gold looks really good here. You can see we're pushing those highs near 2,500. Once again, right here, really clean look, moving higher. This is, if it settles higher today, it'll be what, the fourth straight trading day that it settles higher right there. The miners are really starting to pop off. We're starting to see good earnings or good earnings reactions come out of the miners right here. You can see GDX had faded a little bit. It got a little too hot here in early July. It's faded a little bit, but it's starting to come back right here. We're starting to see these individual names start to pop off. We talked about how Newmont had been such an underperformer up until recently, and it's finally breaking out of this big base that it had formed right here. Revisited the 44 area a couple times, and now is pushing more toward 50. I think this will start to run more. Some of the smaller names that are popping up are really starting to move. Here's one, Alamos Gold. It's pushing highs today. When was the last time it was up in the $18 range? It's going to be a while. I think we probably have to go back even farther. This might even be new all-time highs for AGI right here. Beautiful chart. You can see here, nothing to complain about right there. And it had earnings right here back on the 31st. Dipped a little bit with the overall market, but now drifting, pushing to new all-time highs, looking great. IAG is another one, another miner that was on my radar right here. These are some of the smaller ones. But you can see here, once again, 2 big days here, up 16% and then 10%. This is following another positive earnings reaction here. Something we haven't seen in a long time. I mean, these stocks have been dead money walking for years and years, and now they're starting to get a little bit more attention. We're starting to see actual positive earnings reactions. Shocker. I mean, you know how it had been over the past decade or so, where when gold was kind of out of favor for the most part. The miners were just down in the dumps, and now we're starting to see them really catch up, start to spin higher. These are great looking charts, especially in a month like August, pushing toward these highs right here. We could catch some really good flyers on some of these moving forward. And I know a lot of people in chat have been talking about gold, silver. There's just so much opportunity here in this space, I think, and the charts are really pointing us in the, in a bullish direction here.
Yeah. And again, it's been taking a while for the miners to come out of this, but it makes sense too. It's like, I mean, oil's not burning up the chart, you know, $75 somewhere around there too. And it's, I mean, for when it comes to a miner, this is kind of the perfect condition. You're at all-time highs for gold, and you know, oil prices aren't $120 a barrel. So when it comes to diesel, you know, the thing that basically gets the gold out of the ground, like their costs aren't too heavy duty. So it's really a perfect setup, and it's good to see the charts finally heading that direction.
Well,
Enrique, any thoughts?
I think it's interesting too that I don't think it's getting a lot of press right now, which
Yeah,
I think
good.
works in our favor. Everybody's paying attention to all this economic stuff, the Fed and the whole yen scare, the volatility. So there's been all of this noise out there, everything happening in the Middle East. There hasn't been a big focus, you know, this earnings season on these gold stocks, nothing making the front page of CNBC. So it'll be interesting to see like how this develops moving forward. But the charts are definitely, you know, saying higher prices are in our future.
Yeah, I mean, quiet highs are sustainable highs. And, you know, if you look at gold, it first sort of had this breakout in April, and then it's come back, and it was very extended from the 50-day moving average, which just means people were very enthused. It's come back and tested that 50-day moving average multiple times. You know, it's you like to see a big base. I mean, Gunnar, this is actually kind of like a perfect setup for you. Yeah. With some of the trades that you look at. Yeah, I mean, you know, you're 6 months here. You set up this base, and I kind of feel gold wins. Like if you're worried about the dollar, gold wins. If you're worried about Iran, gold wins. You know, if you're worried about the economy, gold wins. So I think it's a real nice asymmetrical risk reward at this point.
Yeah. Enrique, you were saying this earlier, and it might be something interesting. Again, we're going to hit tickers, we're going to hit top trades. We got a bunch of stuff to cover, but one of the things you were saying earlier was sort of how your style as a trader is different than Gunnar's style, because you can come in, you watch what Gunnar's doing, you know he's doing swing trades. Tell us about that. Tell us how the way that you're seeing things and the way that you're looking at trades in today's market's a little bit different, and it's good because it's very complementary.
Yeah, look, I'll explain it this way: is that you know, there are three classic technical patterns that work very well. One of them or two of them are predicated on breakouts. If you can find a stock that is in a uptrend and a base and then breaks out, or if you can find a stock that is in a downtrend, a base, and then breaks out. I focus mostly on the third, which is I'm looking for stocks that are in an uptrend that then get hit, and we go in and figure out and say to ourselves, should it have gotten hit? Will it recover, et cetera? So that's called buy the dip in an uptrend. You know, a perfect example would be, a perfect example would be the S&P 500. I'm going to come back to that one in a second, but maybe pull up the chart of Microsoft, which is something we wrote about today. You know, this is a great example. And if you stretch the chart out a little bit more, you know, this company, I mean, we all know Microsoft has absolutely crushed it. They've grown earnings. They beat numbers. They have positive earnings revisions. They have a ton of cash on the balance sheet, you know, and really what often happens with stocks like Microsoft, you can see how extended it got there back in June, July. It just, there were so many people, what I like to call the markets are like a raft. So many people were on one side of the raft so excited that you didn't need so much to have the stock pull back. And the news that came out was about them spending so much on AI, but they beat their cash flow numbers. They beat every single number. So to me, when you can find stocks that are these all-time winners, and you can go in and take a position, you know, we also with these our style, we tend to have very high hit rates. So our hit rates historically are between 70 and 75%. Mm-hmm. So the key is, you know, we generally are not making with the equities 30, 50%. We're making 5 to 25. But what happens is when you have those very high hit rates. So that's just one key, and it fits very well with what Gunnar does, because the two styles kind of sit next to each other. And Gunnar, you and I were joking, the last week and a half with the market pulling back has been awesome for my strategy. I had nothing to do 4 weeks ago. You had lots of trades. Now all of a sudden I've got a ton of trades. So they kind of our strategy zigs when Gunnar zags and likewise.
Yeah. Do you want to stay on that beat? Other than Microsoft, are there any other tickers, any other trades that you like just in general and that readers would want to know?
I'll tell you what I would buy right now. Absolutely. Chipotle. I mean, this is an absolute, you see something like this once every 5 years. And, let's just go through the same setup. Chipotle is, and in our strategy, we look a lot at technicals, but we also look at fundamentals. The company is growing like crazy. The company is crushing numbers. The company has positive earnings revisions. And now what had happened, very similar to Microsoft, Chipotle had pulled back because they had gotten very extended and all that. And then today you see, Brian Niccol, who's the CEO who had been at Taco Bell before, resigned to go to Starbucks. He's been a rock star, but he's being replaced by the COO, who's been there since 2017, and the CFO, who's been there since 2002, has said he's going to stay another couple of years. So we already liked Chipotle because it had had a very nice pullback. They posted blowout numbers the other week. You can look at that chart, actually. Before this little gap down, the chart was recovering very nicely. This is exactly the kind of thing that we do. We buy things that were still in an uptrend, had begun to recover, and then, with this stock being down today, 14% on the 13% on the CEO resigning. I think it fits both for just going out and buying the stock, but I would also look at some call strategies. I think you're going to get, buy calls where it was trading this morning, 55. I think it's very, very attractive. But this is the kind of thing that we're looking for, the combination of technicals and fundamentals. And this one, this is as attractive a trade as I've seen all year.
Yeah, and luckily, it had the split. So we're not talking about a $3,000 taco stock.
Exactly.
It's hard with optionality on something like that. Now it's 60, 70 bucks. You can put all sorts of options.
I will be very surprised if this stock is not back at 55 within a week to 4 weeks. Again, because they're not going to miss a beat. The guy's great, but the guy is not the entire company.
Yeah.
So.
Awesome. What else is on your radar? That's a good one. And again, that's very relevant just for today. That's a nice little opportunity.
Yeah.
Get in cheap.
We
back on a bad day.
In the chat, we've been vocal. I put some ideas in there, and I'll actually go in the chat and put an official Chipotle because I actually keep track of it all. I'll put an official Chipotle recommendation out there a little bit later. Talon, which we've talked about, actually reported great numbers this morning. They happened to report this morning, so the timing is great. The stock almost hit a new high. Look, we with our strategies, again, we do short-term trades, but we'll also do long-term ideas. And Talon was one, I recommended it first on the board at about 105. One of the reasons I recommended it, I think this is a $150 to $200 stock, and it's this hidden AI play. We're not going to. NVIDIA can make more chips. AMD can make more chips. Anyone can make more chips. We're not making more nuclear power plants anytime soon.
Yep.
So these are good examples. Chipotle and Talon of kind of the way that we approach the markets. Where we're looking for things that will perform in the near term. But we're looking for strength, and we're looking for. I like to buy winners, man. Like Talon's a winner. Chipotle's an absolute winner. So I think both of those are really good ideas right now.
Awesome. Yeah, they're both good stories too. Me and Gunnar talk about this every week. I'm a little bit less chart savvy than Gunnar, obviously, and you. But when I hear those stories, I love Chipotle just in the sense that I see them everywhere, lines everywhere, fairly well run. They've had their ups and downs, but tons of people in those restaurants all the time. It's just a food that's not going to go away anytime soon. And like you said, from a talent standpoint, we need energy. We need electricity in the next 18 months. And it's probably now it's like 16 months, like whatever. You can't get it anywhere else. There's nothing that's going to come online other than a few little things that can scale up. And you need companies like Talon or PWR or the other one you were talking about this morning. It's from Enrique's Constellation.
That's another one. That's another one. We have an active recommendation. I think that look, we're going to have a power chat GPT moment, which is, everyone here remembers probably 6 months ago when you first heard about chat GPT and you saw one of those weird videos or something like that. The power moment's going to be we're all going to lose power for a week. And it won't be because of a storm. It's going to be because we just don't have enough power out there. And I think when that happens, these stocks and Constellation's another perfect example, beautiful uptrend. They reported numbers a week ago. And that's really what we're looking for. We're looking for operational strength and chart strength and looking to buy weakness into that. And, that's been a very successful strategy for me across, multiple decades.
And it's
Awesome.
really been an amazing market for that strategy because there's so many stocks out there, so many big visible stocks that are bending, but they're not broken. And that's the key to this, is that they're still in these structural uptrends. And you have all of these dips to choose from. And so even if you're looking to buy, like say longer term, you have a great risk reward point where you know where you're going to be wrong if they really start falling apart, because you're right there by that pivot where, things could go either way. And with the market drifting higher like this, I mean, they're just setting up perfectly for you.
And the funny part, I'll say this. 4 weeks ago, I was struggling to find ideas in my strategy because everything was so extended. Everything
was so stretched, yeah.
I was very optimistic. I think there was great companies. I thought the economy was fine. I thought everything was good. But when all the charts are that extended from the 50-day moving averages, I struggle to buy them. And literally now, I mean, we've published 2 to 3 ideas a week. Versus one normally. It's a trader's market.
Yeah. If anybody in the chat's open on YouTube. So if you got any questions for Gunnar or Enrique, just shoot them in there. We've got a few different tickers that we can look at. What about just some big picture sectors? We just covered gold. We might want to go into, Bitcoin. Gunnar, anything else big that you want to take a look at, like week over week, that we could get your take on and Enrique's take?
Well, yeah, I want to get a couple takes from Enrique. Well, I want to see what he thinks about crypto right here, because I think Bitcoin's in a tough spot if it can't get back over 60K. And it seems to be in this kind of danger chop zone where it might kind of settle into possibly a lower wide consolidation range, much like it was for the past several months since it hit those highs back in March. But I mean, we got a big pop back above 60 and it couldn't hold, and now it's just sort of drifting along here, in the high 59 range, not doing much. It feels like, again, like the crypto buyers just don't have the juice to push this thing higher. Do you think this is just seasonal, or do you think we're just in for choppier for longer as far as the crypto is concerned?
Yeah, look, it's traded recently in the very short term, not as much of a risk asset. It went up in late July when the Mag 7 went down. But ultimately, to me, crypto is a risk asset with a very constructive long-term outlook. So what the hell does all that mean? Is if the markets are going up, I think crypto and Bitcoin will do very well. I think through time, it has the potential to be 100,000, 200,000, a million, all of those things. But if the market's churning, it's going to churn. So, my view, and maybe it's overly simplistic, is, I like buying it when people are freaked out, which was last Monday. When you walk in and it's down 10, I would almost go so far to say, if you see a day when Bitcoin is down 10%, just buy it. Just buy it. Like, don't take your whole portfolio and buy it, but take a portion of your portfolio, 1%, 2%, I don't, whatever it is, Bitcoin down 10%, buy it. And by the way, the corollary goes, if you see it walk in and there's a day where it's up 5 or 10%, probably just sell it, And so I think it's violently range trading, and until it shows us otherwise, that's where it's going to stick. But I'm very constructive, and I think you've had some very good calls, and then that would go to the underlying, to the miners, and something like Coinbase is that if you take a step back. The case for Bitcoin 100,000 and 500,000 to me is very strong, and it's very similar to the case for gold. So I think it's a trader's, it's a risk asset today. It's a trader's, tool right now. But if you want to have a long-term constructive view, it makes a lot of sense to me.
Yeah, I agree with that completely. And as early as the COVID bubble, it was pretty obvious that the correlation of tech growth plus Bitcoin, they were holding hands the whole way up, and then they held hands the whole way down in the bear market in 2022. There has been, some blips in that correlation. Obviously, they've kind of broken from, the mega caps that have pushed higher throughout the summer as Bitcoin's kind of drifted from those March highs. But I mean, I don't think it's a significant enough time frame to say that it's totally broken and it's not going to come back together. Correlations, they do this all the time. But yeah, I mean, I don't see it as a safety trade. I don't see it as as having the same type of emotional pull necessarily as like a precious metals play. I think of it very much, hand in hand with tech, and the same personality of trader that wants to buy an AI stock, a tech growth stock, is going to want to be interested in buy Bitcoin as well. So I think they're very much on the same side of the coin.
I will add one interesting thing though, that like I think there's a generational bid underneath this amongst young folks. Like, it's funny is that gold gets a lot of attention from older demographics. Bitcoin, I mean, when I talk to younger people, it's just the first thing they want to talk about is Bitcoin. When I talk to older people, the first thing they want to talk about is gold.
Yeah.
So, I think that I like buying Bitcoin down. I don't get real scared when it trades down to 50,000, 55,000, things like that. To me, I think, again, it's a good trading vehicle right now.
Yeah, for sure.
Gunnar, would you want to bring up, people are asking about the CLSK, so CleanSpark, maybe bring that chart up. That's one of the miners.
Yeah, I mean, and you know how I feel about this. Like, I would need to see some more positive action before trying this for any type of a trade here. I think the narrative on the miners has gotten a little muddy, just simply due to the fact that I think the jury's still out of whether these guys can really make a lot of coin in a post-split world. And then there's all the talk about like some of these miners, using their hardware for AI purposes instead. So I don't really know where they stand, like from a fundamental standpoint. But yeah, I mean, I think that like I would be much more excited about something like CleanSpark if it got back above $14 and into this range and really showed that it was going to bounce and move higher here. But for now, I feel like we're just sort of settling into a lower range right here, and it could move sideways or down for the time being, and until it catches a bid again.
Yeah. Just skip into another ticker that I'm seeing in chat, Palantir, PLTR. I've got a stake in that one, so my standard little disclaimer that I like it and I hold it. Gunnar can't seem to get in, I don't think, right? You still can't figure out when to buy this thing, whereas I've just been in for like a year and a half. I'm good.
Yeah. I mean, it's and different stocks have their different personalities. This one's kind of a tough one to trade sometimes if you're just trying to trade a pure breakout on it, because you can see where some of these candles have been left out to dry. We have this bad boy right here that's just in his own world, and then we have this. I mean, what an amazing opportunity right here. This was the panic on Monday right here. There's the yen carry panic all the way down to $21, and then earnings immediately after. So definitely rewarded if you scooped up on the dip right there. And now we're pushing toward these new highs. But I think the fundamental picture on PLTR is becoming clearer to investors. I mean, this has been a popular stock for a while. It was definitely a hedge fund hotel for a while here. It checks off so many boxes, from defense to AI to tech and everything in between. But yeah, I mean, you can't argue with this chart. It definitely wants to push higher. I do think there's going to be more crazy, pullbacks that like we've seen in the past. It's just kind of a wild trading stock right now. But I think overall, if you're more longer term focused, then this is a buy the dips and hold type of stock. And it could be, I think it should be on everybody's like short list of like 10 stocks that could be the next big thing over the next decade. This is definitely one of them. I think that there's a big consensus on that. So, if you're more longer term minded, then on days like this, like Enrique was saying, when you get these gifts, when these stocks are just down, big time, that's a great time to just, carefully pick up a few shares every now and then, and you'll do great on a name like this.
And I'll add some perspective. Maybe at some point we'll get my charts on here too to add in. I have access to Bloomberg, and Bloomberg has earnings revisions. And, my view across decades is that stocks very closely track earnings revisions. And when you look at Palantir, the company came out, they were expected to earn $1 billion of EBITDA for this year at the IPO. And I'll show you this number here, Matt. It went from $1 billion to 650, and now it's back at $1 billion. So, I think you had a stock that, struggled. It came out at a big valuation with high expectations. Those expectations got brought down for a year and a half, but now they've been going up. I feel like Palantir, and again, this is longer term, Gunnar, it's kind of like a coiled spring, because I agree with you. You've got a $68 billion market cap. You are, you're on the forefront of AI. You basically are along the deep state, which I kind of joke about. Like, hey, is there a way to make money off bureaucracy? This is a way to do it. And you've got great positive earnings revisions. I could see it catching, I don't want to say quite a meme stock wave, but I wouldn't be surprised to come in and see Palantir, be a $50, $60 stock a year from now with people just kind of buying into the bigger trends. So, but those earnings revisions, I mean, you guys listen to me, like you will hear me come back to first thing I look at are the earnings revisions on a company, and the earnings revisions here are great.
Yeah, I'll see if we can get like that chart that you just showed me. I'll see if we can get that maybe sent over to Gunnar. We can throw it in chat
and Price tells that story really well that Enrique just shared with us too, with the hype, with Peter Thiel and all the big names, in this stock when it first came out and IPO'd back in 2020. I mean, what a perfect time to IPO a stock like this too, during the midst of the COVID bubble, and it shoots up all the way to the mid 30s, and then it gets knocked back to reality. Now we have right here this huge IPO base, and once we're clear of something like this and it really starts rocking higher, I think the sky's the limit on something like this. I don't think any targets, a year, 18 months from now are going to sound outlandish. A double in the next year, yeah, probably. Is this the next $1 trillion stock? Maybe. I think we're going to see a lot of that as the narrative shifts on this, and it comes out of this massive IPO base that it's built for the past 5 years.
I like it. I'm in it. One of these days, Gunnar will get in. We'll see what happens. Let's see. We've got. I do want to ping you guys on something bigger picture too. I think we've gone through some of the tickers and some of the topics that you had, Gunnar, but I'd like to talk big picture with economy, the potential for a rate cut, and where you see this, because it sounded like, Enrique, you sounded pretty positive about the economy. Ironically, people are writing in the chat, I think we're up against the Jim Rickards call at this point. Everyone's like, I can't have 2 calls at once. Well, we're glad you're here. Now we're going to talk big picture stuff. And again, I know Jim covers this all the time. I think he's still a question mark on the cut or not. And where that's going. But in general, I guess I'll ping this to Enrique first. How are you seeing things big picture in between now and the election? You've got the possibility for a rate cut, economy is good or bad, inflation's wherever it is. How are you seeing all that? And does that play into anything with your trades?
Yeah, well, I mean, as Gunnar and I were talking before, 90% of the time, well, it's sort of on both the stock, any individual stock and the economy, 90% of the time, I don't have a view. I think the most powerful thing you can say in a trade is no, that you don't have an opinion, and your trades and your views should be by their very nature quite selective. It's like when you're playing blackjack, you want to wait until you got the best hand before you're going to double down or things like that. What I do think is fascinating is that a week ago or the last 4 weeks, we got this really interesting combination of a very overbought market, technically, that then kind of broadened out, got super strong, and everyone was just like soft landing, everything's great. Like just everyone was on one side of the boat, the raft, as I say. And then we went right into that number 2 Fridays ago. And, again, I've been very steeped in this stuff for 3 decades. There were a lot of anomalies in that job number. And I put it on the board several times. They have this category that says could not show up for work is one of the BLS things. Mm-hmm. It was almost 500,000 people the average July number is 50,000 going back 35 years. So the BLS came out and said, oh, the hurricane didn't have anything to do with anything. But yet I've got this, and I posted this on Twitter. There's this chart of like these little things, and then this thing that goes up like this, 500,000 versus 50,000. And by the way, I'm getting this from really smart economists who I know and trust. And so they came out and said, look, it looks like there were anomalies in it. So, they were expecting 165,000 jobs. They got 115 additions. First off, that's not terrible. That's not negative. Second, it's 50,000 jobs. Third, you had the entire Houston area. There were 1 million people without power for 2 weeks. And so what I said is I go, look, let's look at the jobless claims because we're going to get that data because I'm sure you all know this. Jobs report is monthly. Jobless claims are weekly on every Thursday. And lo and behold, that Thursday jobless claims came out and it was just fine. And I'm going to tell you, this Thursday is going to be just fine. And the next Thursday is going to be just fine. So I think people were maybe extrapolating. We had a very extended market. We were going through a normal correction. They've got to be nasty to work. This one just got extra nasty because you went into that, I won't call it a miscommunication, but that sort of obfuscation on the jobs report, and then the yen carry trade over that weekend. But again, this doesn't mean I think things are hunky dory. I think there's a lot of challenges and all that, but the trend is your friend. I mean, look at the market that we've been in. It's going to take a lot more for us to go from 2.5% GDP growth to a recession. That doesn't happen in a day, a week, or a month. That takes multiple months, and it's going to take a lot more to break this market. So until the market tells me otherwise, we're in a bull market, in my opinion.
All right. Gunnar, what's your take?
Yeah, I mean, I have to agree with that. I think that what we're experiencing right now is the herd is very data sensitive at the moment because there's so many eyeballs on when's this rate cut going to happen and what's it going to look like. And Matt, are Fed fund futures, are we still at 50-50 for 50 basis points versus 25?
Yeah, dude, that thing's been dancing around in a crazy way. Because last Monday, it went to 99% chance of a 50-point cut. And now it's balanced out. It's 54% chance of a 50-point cut, 45% chance of a 25-point cut, and 0% chance of staying the same. So the CME tool at rate probabilities is still, we're on the 13th. I think the decision is on the 18th of September. We're almost a month out. The market doesn't like surprises and the Fed doesn't like surprising people. So I would think this thing's baked in that we are definitely getting a cut. And right now the edge goes to the 50 point. So we'll see that one. Who knows which way it goes.
And can I think some people in the group have been around for a while. A lot of people, when they look across the last 10, 15 years, they think of rate cuts as being schizophrenic. We're at 0, we're at 4, we're at 0, we're at 4. I started in the 90s. And you know what? We were at 5, and then we were at 4.25, and then we went back to 5. Like, there's a normal world where rates kind of stay in a range, and they tweak it, And I just think we're so used to, since 2000, schizophrenia in the rate world, that the market is much more schizophrenic about its reactions to the rate cuts than the rate cuts or rate increases themselves will be. But just go back and look at all the mid-90s, and this looks a lot like the mid-90s.
Yeah, I don't know. See, I'm probably one of those people that, like, again, I need that story for the narrative, and the way that I think about it, I'm like, there's two things that make this rate like it really can't stay in the range. I don't think it can, right? It can, obviously, but I don't think it will, because it can't stay in the range because two things. One, you got interest on the debt, which is going to become just a crazy line item that everyone's going to point to, all because, Janet Yellen and whatever it was, 2021, when everyone was refining their house at blah, blah percent or whatever, they didn't, essentially refi America. They weren't selling enough treasuries, bonds, what have you then. And they kind of got caught with their pants down, and then they had to sell them at 4 or 5% or whatever it is. And interest is going to be heavy duty. So that's one reason. And the second reason is the housing market. I still think tons and tons of people are just trapped in their house because they can't move, because their mortgage rate refi, they're at 3% or something from 2021, 3 or 4%. And they're like, oh, I want to move and get a little bit bigger of a house. They try and do the math and they would actually, for the same mortgage price, they get a smaller house, or they could have an even higher mortgage payment and have the same size house. So they can't, they're essentially stuck. That's gonna weigh on something at some point. Like if they want to get some volume going in the housing market, that rate just has to get up semi-drastic, like down into the twos, I think. I don't know. Again, that's not overnight. It's just going to be.
Yeah. Well, I mean, look,
Very tough.
mortgage rates have moved 70 basis points in the last, 4 or 5 months. So,
Yeah.
I guess my point would just being more, we don't have to be schizophrenic. Things can move in stair-step functions, and it's actually okay. But I agree. I mean, look, I think rates are going to come down by 100 basis points on the short end of the curve.
Yeah.
So. And it's good for stocks. And I'll say one last thing, Garner, because I think this is important. When we talk about all this macro stuff, if you're a trader and you've got a good trading process and you've got good risk controls, you kind of shouldn't care. I had a great story one time. There was a very famous investor named John Griffin, and we had this meeting with him and we canceled it because there was going to be a Fed rate meeting. And he sent me this nice thing, a little bit of Southern drawl. He goes, well, I appreciate you guys are worried about the meeting. But if your investment process is such that you're worried about the meeting, you should probably be worried more about your process than the meeting. So I think that's what Gunnar and I are both focused on doing is coming up with ideas that are evergreen, that are going to work. And then we've got risk controls that if it doesn't work, we're ready. So.
Boom. Very well said. Gunnar, another ticker that has to do with what you guys are talking about, like, again, the small caps and, micro caps in general. I think someone wrote in IWM.
Yeah.
So maybe take a look at that and see how that's withstood
the massive rotation that got the smackdown. I mean, this was a tough look for IWM, especially since this right here was the attempted breakout, an extension from this bull flag pennant, whatever you want to call it, right here. This was on the Fed day right here when we had all these rotation trades that started to really push about an hour before the close. And we had biotech, small caps, all these stocks just started moving all at once. There was a big wave of buying, and then they went right back down to break even in the last half hour of trade. And then they followed up by just completely falling apart in the rest of the week. And then we have, this is Monday the 5th right here. This is the yen panic right here, where it just totally broke back down into its range. I mean, this was one of those plays that I wanted to get into, but I needed to see some additional confirmation, and we didn't get it. And so, I mean, that's how it goes with these. This has been a very difficult trade to track almost all year. Every time it seems like IWM is getting ahead, it gets smacked back down into its range. So I need to see it back. I mean, I think it's fine here at 205. It could sit and chop along, but in order to get bulled up on this thing, I need to see it back creeping back toward 210, 215, and start filling these gaps and acting like it's going to move higher. And right now, it's very much lagging the rest of the market. When we have the NASDAQ and a lot of these big tech names up nicely today. NASDAQ 100 is up 1.4%, and the Russell, it's up 1%. Yeah, it was down and lagged pretty badly yesterday. I think it just needs more time, and maybe this is just sideways for longer for these poor small caps right here. But fortunately, we didn't feel the need to jump on a trade early and get burned on something like this.
Was there anything else on your agenda? Any other tickers that you're looking at, Gunnar, that you want to pull up?
Let's see. We talked miners. We talked crypto and the $60,000 wall for Bitcoin. Is it going to get its act together? Here we have CPI tomorrow. That was on my list of things to talk about. And do you have any opinion on that, Enrique, or are you basically ignoring it?
Yeah, I mean the trends have been going one direction. The most recent CPI was what started this off. I follow a lot of economists who are very into the dark arts of the calculations, because that's the crazy thing about these calculations. I mean, they're kind of 50% bullshit because there's a lot of elements in there that are manufactured and all that. And most of my smart guys have said we've got a couple months where it's going to look really good, and then it'll pick up again. But a lot of it has to do more with like the way the housing rent component is calculated, all that. But I did post this the other day. Go look at the price of lumber. Go look at the price of gasoline. Go look at the price of corn. You talked about this the other day on this. They're all going the other direction. So I will be very surprised if there are any real negative surprises coming out of it, especially since the last one came out pretty sanguine.
Yeah, and I think if we get anything close to what's expected for CPI tomorrow, I think the market's going to like it, obviously, because markets hate uncertainty. And if we get more clarity on how September is going to look and what's going to happen with a cut, then I think things are going to start to settle down. Just overall, people got way too bulled up earlier this summer, and we had such a great run from those October lows from last year with the melt up rally that ended up into the holidays that kept on pushing higher, and the AI rally that really lifted all things tech and mega cap and drove the market higher earlier this year. And now I think just due to recency bias and it being August and people starting to get a little bit spooked that the market's actually going down. Yes, the market goes down sometimes. Yes, the market can go down 10%. And, these trends are all still very much intact. That's normal behavior. But we all tend to forget in this fog of war that we get into, and then we get some sort of event like what happened last Monday, and everybody freaks out. And I think we're still kind of in that period where a lot of the bearish arguments are really kind of taking hold in the market, and they're not going to stop until this market pushes beyond it and it gets back to highs, and everybody's going to forget about it and just sail along.
And I would put one note of caution. I mean, I don't want to sound like overly bullish. Historically, when you get like what happened last week with the VIX and the indices was sort of like getting punched in the face. And, you may recover from getting punched in the face, a day or two later, but you're still pretty sore a month later. So historically, we have seen retests. So I don't think, this very much is lining up. They're just doing very short-term stuff here, very much lining up as a normal bounce. But I think we're in for more volatility. I mean, you don't go from a VIX of 10 to 65. And then, or let me put it this way. It's not that you don't, it can happen, but it is a very low probability that you go from a VIX of 10 to 65 and 2 weeks later, everything's back to absolute normal. So I think the default should be the next 4 or 8 weeks, be ready for some volatility. But hey, here's the thing. Volatility is your friend. Chipotle today, I don't know in the market of 2 months, 6 months ago that Chipotle's down 14% on the CEO resigning. It's presenting up opportunities, so you need to tactically and intelligently take advantage of them.
Yeah, and this goes along with what I was writing this morning in the Morning Reckoning about the S&P right here. And I drew these lines, this kind of, and this may or may not be what we're in right now, some sort of downtrending channel right here. If the S&P gets a little squishy here and fails to break above 5,400, 5,450. I wouldn't be surprised to see us come down here. I mean, it's not up on this chart right here, but the 200 days, if it comes down and meets it, it's going to be right around 5,000, which is right around these swing lows here from April. It wouldn't surprise me at all if we had some sort of, a little bit of rollover right here. Not anything necessarily like super sharp and scary. I'm not talking about like a big like event-driven day like we saw last Monday. But if the market drifted lower a little bit the rest of the month, maybe retested those lows, maybe came down, maybe undercut them a little bit, closer to 5,100, something like that. I think that would be a nice needed reset, a late summer doldrums kind of, squishy looking August. I don't think that would hurt anything at all necessarily. I would be more surprised if we just shot to new highs without any resistance from here than seeing some sort of retest of those panic lows, and not in a panicky way maybe, but just a choppy, difficult market for the time being. And why not late August heading into kind of an uncertain time of the year, thinking about the Fed in September and all that. It could snowball into sort of like just a little bit more bearish sentiment heading toward the end of the month, and that would be perfectly fine too. Again, That's not saying the market's going to crash. I do think things are going to pick up in the fall at some point. But yeah, like there's nothing wrong with this action we're seeing right here.
What about, we got a question coming in from Igor asking about the dollar. You want to pull up the DXY chart?
Yeah, I can do that.
Any
What are your
thoughts
thoughts
here?
on the
Because
dollar?
again, we see a breakdown in the dollar, again, it would be, if we get a rate cut, we get a dollar heading down, I mean, you're gonna have a nice little tailwind, most likely.
I mean, dollar down, good for risk assets, right? So I don't think it's going to hurt gold at all. I don't think it's going to hurt the precious metals trade right here. I don't know if Enrique, if you have any bigger thoughts on what's happening, in the currency market right now with the yen and everything that's happened.
Well, I mean, I'll throw two things out there. One that's very simple and one that's actually rather complex. I keep my view on the dollar pretty simple. Rates down, dollar down, all of the things held equal, good for stocks. The only other thing I'll tell you about the yen carry trade, because this one I do have a more like probably incisive insight. I was a Japanese major in university, lived and worked in Japan. I actually know people that have the Japan yen carry trade on. These are some of the most sophisticated investors on earth. You and I can't go put the Japan yen carry trade on. I can't call my broker. I can't go on Robinhood and say, "Oh, put me, I want $10,000 the Japan yen carry trade on." And so, like, the idea that the whole thing's just going to explode. I mean, these are the most sophisticated players on earth. That doesn't mean they won't mess up. But I just thought it was a red herring. I thought it had much more to do with just people being one side of the boat. And then the boat rocks a lot and all that. So look, let's keep the world simple. Dollar down, stocks up is generally how it goes. All the things held equal, but I don't think it's a huge driver. And look, I know long term, if we lose dollar hegemony, it's going to be a big deal. I don't think that's happening today. I don't think that happening next month, and I don't think it's happening in the next 6 to 12 months. So I'm interested and concerned about it, but it's not driving our trading, certainly our trading decisions right now.
Yeah. Again, that's all very good, Grabby, for anyone that's watching at home. Again, we've got Gunnar and Enrique here. This is the valuable part, right? We throw the tickers out there, which is great. We get to look at some charts, but really the system behind both of these guys' mentality is very, very strong. Especially, I mean, again, your anecdote with saying, if you're worried about one FOMC meeting, you got the wrong system. Your process isn't set up right. So that's all really good stuff to think about, and nice and gravity for sort of the next 3 or 4 months, because we're heading into election. I think general sentiment is kind of like let's freak out, but let's keep an eye on the charts and see where we go from there. Gunnar, any other charts that we could start throwing some eye candy tickers up? I don't think they've done anything week over week, but anything else you want to see?
No, give it to me. What do you got? You got something?
Well, let's bring up ASTS. I hold this one. This is the satellites.
I don't like this one.
Yeah, this one you hate because you're
I don't own it.
Yeah. Yeah, if you weren't in it in mid-May, you're probably not in it now. Well, maybe, who knows? Maybe you could have gotten it in July somewhere.
This is your personal space tourism firm, right?
No. You see those ugly cell phone towers all around America with all those big old gray boxes on them and whatever? Imagine 5-10 years from now, they're all gone. And we don't need cell towers anywhere. And all the cell signals just come from satellites. That's what this company does. And there's a lot of narrative there, charts acting properly, so it's a good one. Again, I hold this one.
Earnings tomorrow night.
That's what we talked about.
Perfect timing for you to be pulled up on it.
This is great. Yeah. This is great. And then Lumen, LUMN. That one, I think that was earnings last week, right after we talked about it?
Yeah.
Or 2 weeks ago, it was last week. It looks like, I don't know.
I want you to start bringing me these charts a month before they do that.
Yeah, like maybe a couple months ahead of time. So that's another one. This is the one I call this one Corning Junior or whatever, right? I think these are doing the data center connectivity. So it's like if you've got all these freaking whatever, I'm just making this up, NVIDIA chips trying to talk to each other so they can do all the ChatGPT calculations in a data center. For those things to high speed talk to each other, it's not normal stuff. It's really high tech cables.
I said this in the chat. This company used to be called CenturyLink and CenturyTel. So it was actually regional, rural telephone networks.
Yeah,
They were originally based out of Monroe, Louisiana, and they did a roll up of all these regional networks. And then as the Bells began selling stuff off, they bought a bunch of stuff, and they owned. It was one of the largest. AT&T. It's actually a descendant of Ma Bell. So what they did though, they sold off all that old school stuff and they kept the data network. So what they do is they own a giant data network. Now, I have no view on the stock.
Yeah.
Like, this obviously anything that goes from $1 to $5, I've got some instant doubts about. But in terms of what they do, that is that's what they do. I will throw one thing out there that's for us to think about that I do think is pretty interesting. The big date this month is actually August 28th, and that's NVIDIA Day.
Yeah.
And what I think is really interesting, people's criticism of Google, people's criticism of Microsoft had everything to do with how much they're spending. I'm going to be amazed at NVIDIA that they don't beat that number. And the thing is, if the stock was at its 52-week high, beating the number probably doesn't do anything. It beats the number now, I think it does something. And I'll add one other thing here. I actually am very concerned about NVIDIA a year from now, because I remember Cisco and Corning back during the internet bubble.
Mhm.
But I think, we could see, this is where we could see Gunnar a V, which I think you have to say is a low probability bet, but you get a good jobs report, claims report the next 2 weeks, and then NVIDIA does blowout numbers, which all the Mag 7 are telling us they're spending the money.
Yeah.
That's the whipsaw that will really get people, there's an old saying on Wall Street, the market will do whatever it can to F the most people possible.
Yeah.
And I got to be honest, a V would be the thing would F the most people possible. So.
Yeah. Yeah. It's funny how, I guess it's not slow necessarily, but it feels like the analyst crowd is still working so hard to play catch up on NVIDIA expectations. They've been behind the curve, which is, kind of what caused the whole rally to begin with, is that, they realize that just how powerful this AI driven market is going to be for them. And they still can't seem to catch up as far as valuing this company, which is, I think, super interesting, but it can lead to these big pops, obviously, at earnings.
All right, and one last one. This chart doesn't look as good. This is Serve, SERV. This is a robot company. Ooh.
So this
Look
is
at
a
that.
new IPO.
Look at that creepy thing. Yeah, that looks like an IPO or something. I don't know how it started out, but this one obviously caught everyone's attention a little while ago, but it hasn't cratered. So
why was it up 200? Why was it up 200% in a day?
Robots, dude.
You can't just tell me robots.
I would have to look into it, but shocker, if me and my little pea brain, if I go into their investor presentation and they're like, we make a kiosk that goes in McDonald's and flips hamburgers.
Isn't there a sushi place that has a robot across the street or something?
Yeah, it's the worst.
Yeah.
It's the worst. That robot should be sent to serve in a dumpster. Anyway, this is another. Well, these are eye candy. I don't know if anyone else has any tickers that we want to look at. Then just kind of putting in these impressive upward moves, because sometimes there's a story there. Sometimes these fall out of favor, fall out of bed.
I'm just naturally suspicious of a stock that's up 200% a day like that. It's just like, what's going on?
I mean, and I guess the one thing I would say about all of these, and I'm sure Gunnar said this before, look, speculations can play a role in your trading and portfolio. You can get lucky. You can make some great money sometimes with something that goes up 2, 5, 10-fold. Just size it right. Just understand what you're doing. If you're trading this stock, understand you're not trading NVIDIA. You're not trading Microsoft. You should have an expectation. And this is one other thing I do if I go into these stocks, and we will sometimes, I basically say to myself, I'm going to do this investment and only do as much as if I just lost it all.
Yeah.
I make the investment and I write it down to 0 in my book. And then you're going to be a lot better when you're trading things like this, with that kind of in your head.
Yeah. If anything, you're going to get into one of those and there's never going to be a great outcome because you get in smart you're going to be at like a 1/5, 1/10 position. And then if it goes up and it triples, you're going to be angry because you're like,
Right.
oh, I should have made this a regular. It's like, that's all Monday morning quarterbacking. But yeah, what Enrique's saying is absolutely correct. Sizing on those things matter. There's a super speculative, and we're only really looking at it because they're they're popping up on some of the high movers of the day and just trying to see what's going on in those spaces. Well, we got Tesla. I hold Tesla too. I like Tesla. We got
this is my last chart, and it's Tesla's back over 200 right here. I think this is a good risk reward spot after giving back all of that rally from early July. When you're wrong if it doesn't extend from here. I think this is not a bad bet on the long side.
Yeah. I like it. Can we bring up MU, Micron?
Yeah.
That was one more that was the last one from the chat.
Look, I think what's going to be interesting with MU is honestly going to be NVIDIA. Like, MU doesn't report till the end of September. NVIDIA reports in the beginning of August. And, the thing with this chart that I'll tell you, this thing could be at 120 in a nanosecond. Like when you look, we just went from 160. So this company is beating numbers, and it went from almost 160 to 90 in 45 days.
Yeah.
So there's something in the market symmetry. Could it be back at 130 in another 25 days? Absolutely. But as long as these companies are spending these money on these chips, I don't, until that changes, I'm going to go with it's going to continue.
Yeah.
Yeah, there's a lot of people that could end up on the wrong side of some of these. SMCI, it looks like it's curving higher right here after totally breaking down. Everybody got very bearish on these very quickly, and that can change in an instant when earnings start coming in. So we'll see.
Yeah. All right. Well, looks like we're a little bit over time. I want to say a couple things, and I want to give you guys the last word. One, I saw in the chat people were like, "Hey, what's Enrique doing? Is he joining you guys? Does he have his own service? What's happening?" The thing that I know 100% is we're on Top Trades. This is a free call. We like talking to tickers, talking shop, talking narratives. But the thing we like even more is being around smart people that are good traders. Enrique, 100% one of those. And in the talks that we've had, and we're going to talk after this, he's in town here. I do like the fact that your trading system and the way that you think about things very complementary to what Gunner's doing, and your impact in the chat, and again the feedback that we're getting from readers, all very, very positive. So it's one of those things, we say this a lot. Sometimes we'll say it in editorial we write and whatnot, but it's like, would you rather have $1 million or be surrounded by, be friends with 5 millionaires? It's like that power of being around smart, successful people. Enrique's one of those people. So we're really glad here at the trading desk and Top Trades to have a group. The comments that we get in the chat on YouTube, Gunner's insight and his experience, and then especially adding someone into this community here like Enrique would be really powerful. So we really appreciate it. So Enrique, I'll give you the second to last word.
Yeah.
So anything you want to cover, anything that you missed saying or whatever, and then Gunner, you can get the last word and we'll wrap it up here.
Yeah, look, I maybe it's because I'm a dad, so I'm full of like dad sayings and jokes, but people see, I put it in the chat all the time, plan the trade the plan. I think that's the key to all of this, is there's a lot of approaches that can work in the stock market. There's different approaches that work in different markets. You got to come up with a great plan, find great mentors, guys like Gunner, guys like myself, and then take that plan and then stick with that plan. And I see that a lot in the commentary in the chat board. The other thing is plans take time. So it's a process. And that's the funny thing about trading. You're going to lose. You're going to lose. It's like baseball. But by definition, you're going to lose. The key is after you get through 6, 12, 18 months, or God forbid, 6, 12, 18 years, have you won a lot more than you lost? And that's process. Process. So, plan the trade the plan. It's my trading and investing motto. It's actually my life motto. So, I don't have that tattooed on me, but maybe soon.
And I'll say again, we've been hanging out for a while, but any of the tickers or ideas that you've had, they're very, very solid, very well thought out. So, the trade plan looks really well from that standpoint. So, all right, Gunner, we'll give you the last word. What do we got?
Yeah, like I said earlier, I'm really interested to see how the S&P reacts up here near 5,400. Is this going to be a spot where we hit a little bit more turbulence, get a little bit more chop? I wouldn't be surprised if it was. we'll see. And we got CPI tomorrow. So we'll see if the good vibes continue and folks get excited about inflation data. I don't really get excited about inflation data, but hey, that's what the market likes these days. So we got to keep track of it. But yeah, that's what I'll be watching. And that will probably dictate like how we're looking at the markets for the rest of the week and into next week in what could be a little bit choppier of an August trading session. So we'll see.
Awesome. Well, thanks everyone for tuning in. We appreciate all the comments. I think Sergio had the last comment in there. He said big day top trade. That sounds good. I think that means this was a big day. It was a great day for top trade. So we appreciate it, guys. Thanks for everyone out there in the chat, and we will see you next week on Top Trades. Have a good one.
Thank you.
See ya. Thanks, Enrique.